it's time to discuss top stocks for August. So we're going to talk about your top 10 stocks. We're going to talk about the fundamentals. We're going to talk about the technicals, why you're watching them. And then at the end, I'm going to ask you a couple questions just as far as what you think is going to happen in the overall market come August. We saw July was choppy. We made it through. We survived. So let's get your top 10 stocks for August.
All right, Fat Man Zoom. We're just going to get this out of the way. All right, let's rip the Band-Aid off. It's Penn National, guys. Penn National, you guys know, I know it's been tough. Since March, it's done nothing but downtrend for the last 6 months. Oh, well, 4 months. So it's been really tough, but it has not deterred me in the sense of I'm ready to divorce myself from Penn National. I'm still holding strong. I've been adding to this. I actually added to it 2 weeks ago. And so I'm continuing to average down on this and come up with a really good average. And so I think with Penn National having earnings on Thursday, and we've talked about this a little bit earlier about how football season's coming up, and really that's where Penn National really shines. And it's not even necessarily the NFL, it's college football because of the Barstool Sports side of things that they can leverage. Barstool has a huge presence in college, so much so that now we just got word last week that the Arizona Bowl is going to be completely taken over by Barstool Sports. The ads, the commentary, the analysts, all that stuff, it's going to be completely run by Barstool. And I think this is a huge move for them. And we know how Penn National owns was 35% of Barstool. And so I think that this is going to be interesting. It's not just about Barstool, though, guys. Everybody kind of looks over this fact because Barstool is just this big presence over Penn. But Penn National is the largest regional casino in the country. They have more casinos in more states than anybody else. And so we're starting to see things open back up. As demand continues to increase, people are throwing money everywhere because it's just everywhere. I think that we see pretty good numbers on that side of things as well, on the brick and mortar side. So I think Penn National is definitely going to be one to watch for.
Here's what I'll say about Penn National.
Yeah.
Penn National, first off, August 12th, they have a new casino opening up in Pennsylvania. So we'll see the revenue from that. It should have a Barstool sports bar in there. So that'll be cool. Arizona is a great move. Arizona legalized sports betting in April this year.
Yeah.
So we like when sort of the starting line's the same for everybody. And the actual platforms haven't launched yet. So their goal is to do it by the beginning of football season. So this Arizona Bowl is really smart because Penn's gonna have first stab at that. So I'm excited about the Arizona move. And while on the surface it may not seem huge, I think this is gonna go a long way for them to sort of dominate Arizona and who knows, maybe take pole position.
Yeah. And we look at the chart here. Obviously, buying in the earnings does carry its own level of risk. But this seems like it's really kind of getting down into a buy territory at $66. It closed Friday at 68, which is a little disappointing, especially after it had a pretty decent run after it bounced off of the bottom at 63. But I think that we could potentially see a run into earnings on Thursday. It remains to be seen, but I'm very optimistic here on Penn. Next is going to be Palantir, Fat Man Zoom. And so I think that this will be interesting for Palantir. So they have earnings this month, and they've kind of been a little bit just kind of under the radar after they've had some really monster moves when they first went public. When they first went public, it went crazy. And so I think that now that it's cooled off a little bit, we could see some promising numbers from them. Their plans to really kind of break into the commercial side of things rather than just rely on the government contracts has been really a pain point for them and an area that they've been really working towards as far as continuing to build that out. So I would be very curious to see how that looks, and I think that we could see some really good numbers from that. If we do, then Palantir should have some really solid moves overall. I really like the company, and I think that this is certainly one to be watching for in August.
Yeah, I like Palantir. You know who else likes Palantir?
Oh, Aunt Kathy.
Aunt Kathy loves Palantir. So I do like it. I think there will be. I believe that after next week, there's going to be a tech spec move. I'm talking Palantir. I'm talking big commerce, stuff like that.
Yeah.
And so I think that if you're patient in Palantir, it will pay off. So it's going to be interesting to see. And Government contracts are the hardest to get, so I do think they cracked the code on the commercial side of things.
Yeah, and it's coming back down to a buy zone here. It's been in the low 20s. We liked it down here last time, and I think that this looks like a really good spot to at least accumulate or add to if you already own Palantir. The next one for me is going to be a Zoom, and Zoom's going to be one that of course, you love it. We know why, but I love it too. This has been a favorite on the channel for the last 18 months. I first started talking about Zoom being a solid buy down in the low 100s right as the pandemic started for the obvious reasons. Everybody's at home, and they were using Zoom like crazy, and the investors, mainstream media, whatever you want to call it, it's kind of like poo-pooed on Zoom because it's like, well, everybody's going back to work. They're not going to use Zoom as much. And we're starting to find out, and we've been talking about this forever, that we said that the work from home thing is not going away. They're not putting the tube back in the toothpaste at this point. And the best they can do is give a hybrid approach. And that's really kind of what it seems like it's going to happen. You go into the office maybe once or twice a week, if that, and then the rest of the time you're working from home. You're still leveraging Zoom at that point. And let's not forget that Zoom gave away their services for healthcare and schools, and they're ready to cash in on that. And I would expect them to potentially shed some light on that this quarter.
I'm really bullish on Zoom this month. I think the Delta variant is going to play into what we're already seeing as far as businesses walking back their return to work. So some businesses we're already seeing are saying, hey, you know what? Don't come back so soon. And so I think they're going to be a little bit more cautious moving forward. The one thing people need to consider is I think they need to separate their thought process behind whether they believe the Delta variant is legitimate or not, or how the response should be, and really think about how they think the macro response will be. So that's different. What you think the response should be is different, could be different than what actually happened. So whether you agree with it or not doesn't matter.
Yeah.
What is likely is because the response was so slow the first time, most local governments are going to just be overcautious. So it doesn't matter whether you think it's legitimate or not. It doesn't matter whether you're looking at the low death count. Governments are going to feel obligated to respond, in my opinion, and businesses the same way. They're going to keep it status quo before they're not going to force back.
Yes.
Get moving. So I think that's the response. And so if that does happen, I think Zoom will have a great month.
We're already seeing that from the likes of Google and some of the other big techs, Facebook as well. The ones that wanted the employees to come back, and now they're pushing the dates further back as well. So I agree 100%. We look at the chart here; it's still holding above the 200-day moving average rather well, and I think that this could be in the works of a cup and handle pattern. I like the bullish setup here on Zoom, and if you guys call it the over/under, I said that Zoom's going to be over 400 by the end of the month. I still stand by that. Like the chart setup here for sure. Next one's going to be Chargepoint Fat Man Zoom, and this is one that I like Chargepoint, but really kind of more along the lines of kind of fits into the whole infrastructure energy sector. Chargepoint's definitely in that conversation. If you guys aren't familiar with Chargepoint, they have they build charging stations for electric vehicles, not just Teslas, but all of them, and they've really kind of focused more along the lines of residential charging stations rather than commercial. And I think that changes this time around. I think they start to emphasize a little bit more on the commercial side of things, parking lots, parking garages, that sort of thing, stadiums. I think we could start to see them pivot or at least start to expand into that. And we could hear from them as far as that's concerned, perhaps this month. Obviously, the infrastructure bill and the Biden administration wanting to put more of the stimulus dollars towards renewable energies. ChargePoint certainly benefits from that as well. I like this stock.
Something to consider as far as ChargePoint's concerned going into next week. Next week, Nuvei, which I talked about as a smaller competitor, reports earnings on Monday. Blink reports earnings on Wednesday. So just a little heads up for people that may be interested in it. I made great money on ChargePoint, could get back into it regardless of whether you like ChargePoint or not. I've said this time and time again, think about the infrastructure stocks that you're getting into. For me, Chargepoint is certainly on that list.
Yeah. We look at the chart here, and I think that I'm not quite sure I'm ready to buy this just yet. We talk about, this just being on our watch list for a reason, and it's just to watch to see where the setups are. And I think that we are not quite yet ready to buy Chargepoint. It's kind of a bit in no man's land. It's not quite oversold on RSI. It's not anywhere near the 50 or the 200-day moving averages. And so I'm not quite sure what direction this is headed in just yet. So I think this is just a watch, wait and see. If it does pull back to the $23 mark, the high $22 mark, around $22.70 to be more specific, that looks like a pretty decent support. If it holds that area, I think that could be a reasonable area to consider at least grabbing a starter or adding to, like Chargepoint there. The next one, Fat Man Zoom, for August, and we just talked about this, but it is Drive Shack. Drive Shack has earnings this week. And we explained, that there is some risks involved here because they've been spending a lot of money, in particular on their putteries. But I'm definitely forward looking here into just the demand, them getting back out. We've seen, at least I've seen on social media, so many people at like Topgolf. And, obviously Drive Shack is much smaller than that, but the demand remains the same. People are out doing stuff. Rory McIlroy has a $10 million stake in Drive Shack. I didn't catch too much of him on the Olympics, but obviously that exposure certainly helps things. And so with their earnings, I'm not necessarily expecting fireworks, but with the price point and where it's at right now and the amount of institutions coming in to invest in this longer term, I like the setup here.
Drive Shack, their success moving forward will be contingent upon puttery and whether the model sticks. It's not a foregone conclusion. I like the idea of the model. However, it remains to be seen how much success it has. So hopefully when it opens in DC, we can go check it out. Rory McIlroy's investment is specifically in the puttery. So the investment is directly for the puttery. So that clearly is their focus. I love that stock. Before you get into the technicals, just want to take a little bit of pause. Guys, this is just good stuff. We give away a free watch list just like this where Brad breaks down fundamentals, breaks down technicals. It's a free watch list. We send it out every morning before the market opens. So if you guys are interested, click on the description, the link in the description. That'll get you access to our free watch list. So guys, make sure you do that.
Please do.
All right, sorry, go ahead with the technical breakdown.
Yeah, sure. So the technicals actually are really good. I like that Drive Shack is held extremely well at this 200-day moving average. It just continues to flirt with this line here, represented by this purple line is the 200-day. So I really like this area. I like the fact that it's been holding here. If it drops below this, obviously it can get a little scary. But the fact that it's holding here is got me really encouraged. I think that we see some pretty solid guidance. I'm not necessarily looking for fireworks, but guidance is what I'm really hoping for on Drive Shack. My next one, Fat Man Zoom, is going to be Under Armour. Under Armour has earnings this week, and we saw some incredible retail numbers from Nike, Lululemon, Crocs, Ralph Lauren, all of them. And Levi has earnings this week, I think, too. And so all of these retail companies have just been knocking it out of the park, blowing these earnings out of the water because consumers are spending money. And so they're spending money on clothes. We talked about how kids are getting back into sports, so they're going to need athletic wear. People are getting back out. They need athleisure. So obviously Under Armour makes great products. And so it's a hometown hero favorite here in Baltimore. So I like this one as well. This has been beaten down so much that I think that the play here is definitely a good one.
All right, and what do we got for the technicals?
So the chart here looks good on Under Armour as well. This got beat down after their last earnings, and they crushed their last earnings and gave up beat guidance, but it's holding pretty well at the 200-day. I like this as a buy, even going into earnings.
All right, what do we got next?
The next one's going to be Airbnb. Airbnb obviously is going to be one that I think continues to do well. Travel is going to be crazy. If you try to find an Airbnb to stay at, it is not readily available. It's slim pickings out there. So Airbnb, the travel stocks in general, are going to continue to roll here. They have earnings this month, and I think it's going to be really good. I like the fact that it's back up over 140 firmly, and we could see nothing but upside from here.
Is Airbnb still one of your top 3 convictions?
It is.
All right.
Have a ton of it. The next one's going to be Clover, Fat Man Zoom. And I'm surprised we haven't brought this up yet in this entire stream because Clover has earnings this month as well. And it's back down to a clear buy level. $8 is an area that it's continued to hold up very nicely with brief drops down below that, maybe around 780. But anytime it drops below 8, I would be grabbing this with both hands. This looks great. I think their earnings are going to be good. We're hearing about how they're expanding their network, and more and more people have bullish outlooks on Clover. Obviously, healthcare is going to continue to rock and roll. The short interest on this thing continues to increase. I think this could very well easily be the next short squeeze. I like Clover this month as well. This $8 range seems like a solid buy from where it's at.
You know I love Clover, and it's tough because there's clearly manipulation going on here, and it's just really how long are you willing to let this thing play out?
Yeah.
And how patient you are. So, it's always been the key for me is always getting that thing above $10 for good. But I agree with you as far as scooping it up anytime below $8.
Like the last couple of weeks, the volume on this has been severely low. So some of the downward pressure has been clearly manipulated. I think we could see volume return leading up in the earnings for sure. Walmart's going to be the next one, Fat Man Zoom. And this one also has been one that has been interesting. It's not anywhere near its all-time highs like a Costco. Like Costco has been going absolutely crazy. Why hasn't Walmart? And there's really no reason for why it's continuing to stay down here. Their earnings are this month as well, or this week. And we see earnings from them, and I think that people are going to be very pleased with this. They should have the same type of numbers as we're seeing from Costco and some of the other big box stores. I think there's some pretty decent upside potential for Walmart. I like it here at the 142 level. Expect this to see somewhere close to all-time highs leading into the end of the month.
Yeah, Walmart's an interesting one because I'm actually it's starting to begin that uptrend. I'm a little surprised that it isn't at its all-time highs.
Yeah.
But it's another one that long-term investing is a great stock.
Yeah, I agree. So the last one, and this one kind of snuck in there. This one is Disney. And so if you guys didn't catch the Disney numbers this past weekend, and this kind of ties into a little bit of the AMC crowd, and nobody shoot me for this, but let's just take a look at the headline here. Jungle Cruise takes in $34 million at the box office. Fat Man Zoom, $30 million for Disney Plus.
Wow, that's wild.
So they raked in $34 million going to a physical movie theater, and Disney Plus made $30 million. So it was 50-50. I mean, I feel like the AMC crowd has got to be unhappy about this. And so Disney is continuing to kill it here. I like they have earnings as well. The parks are going to be opening back up, and that was the number one revenue driver for Disney, was the park revenue. Now they have this Disney Plus streaming service. This is a two-headed monster here, in my opinion. They're coming after Netflix and a lot of the other streaming services. They're all doing very well, but in my opinion, and I said this before, I think Disney is numero uno sometime in the near future, within the next 5 years as far as streaming services are concerned. And so you put those two together. I like Disney, and I like it this month because of the parks opening back up. I think we see some really solid numbers out of them and really upbeat guidance.
You're not concerned at all about the parks actually delaying opening due to this?
I'm not, only because I think it's temporary, especially with the Delta variant and what we're seeing overseas, how that's playing out.
Disney, I'm glad you brought up the box office numbers versus their streaming. I think this is going to be their key competitive advantage as we move forward, is their ability to offer their specific content and to charge for it, like pre-release, right? The premium, I guess they call it the premium, as far as like you can pay like $29.99 to get the movie at the same time as it hits theaters.
And it's still cheaper than going to the theater. You can have all of your family members. You can have a big old watch party. You spend $30. You go to your local store and get the candy you need that you don't have to spend $50 for at the movie theater. Why would you go?